Andrew, what are the benefits? What are the tax benefits of a trust in Ohio?
Okay, first, revocable trusts, which means they can be changed during our lifetime. I would say don't have large or enormous tax benefits to the average person who has either some assets that they own in other states, so complex assets from a prior video, or beneficiaries who are facing unique needs, complex beneficiaries. But what I will say is it's important for people to understand that for the average person who has a revocable trust, there's not disadvantages from a tax standpoint. So trusts are treated as disregarded entities by the IRS, which means we're not going to make you file a different tax return during your lifetime because you own things as a trustee of your family trust now instead of in your individual name. Another common example of a disregarded entity would be a single member LLC. So people that want to put rental properties, I used to own a rental property. I still filed my normal 1040, and the rental portion of my income, not my W-2 income, went onto a schedule of my 1040. So I wasn't filing multiple tax returns. And it's the same for trusts. I mean, disregarded entity, not filing more tax returns, not having to pull an EIN or a social security number for an entity during our lifetime. So for all that you get from an estate planning standpoint, a probate avoidance standpoint, a property transfer standpoint, and even asset protection. My trusts have spendthrift clause and different clauses in them that say, hey, if I'm getting ready to give a beneficiary something, but they're about to go through a divorce or a bankruptcy, or some creditor is going to take a bunch of what they have, hold off for a minute. Don't give them that stuff right before this happens. So we can accomplish a lot with a trust, and it doesn't create a lot of additional tax complexity, or it shouldn't, for the average American.
Excellent.
Thanks.
Very good.